Welcome back, everyone. This is Silent with another market review. Today we're looking at the NASDAQ December contract for 2025. Starting off with the weekly chart. This week we opened here, we've traded down and then rallied back up so far this Monday. Again, we're still not looking to pick any tops or catch any shorts for an extended period of time until something more obvious forms that is bearish. So my current outlook on the week is just to see price continue higher. Let's drop down to the daily chart. Again, we were watching that daily buy-side imbalance last week. Price traded below, closed back above, and then respected the high of that buy-side imbalance and rallied from that range. We trade off the high and open here. Price trades lower and right through the constant encroachment of this wick. Price delivers strongly on this Friday's candle. We then open the week up with a gap down. Price trades below and into the previous daily candle, which is Friday, and comes all the way back and retests the constant encroachment of that wick that we were watching on the Thursday candle, right at 24,765. We trade off of that range and overlap the opening price. And once we open, trade down, and then start crossing over the opening price again, we want to look for strength on the lower time frames when this happens to confirm that the remaining time left on this candle is going to be performing in the opposite direction that it opened in. So we open up, trade lower, and then come back and cross over the opening price of this candle again. And the remaining time on that candle we want to see to continue to push up, and that's what we got. And dropping down to the 4-hour chart, we can see that same price action that we're looking at from the daily. Just a really nice respect of that constant encroachment level. So pretty much as soon as we open, price trades up a little bit into the new day opening gap and then starts trading lower. Swipes through that constant encroachment level and then opens above, trades down and almost hits it, just barely misses that level, which is pretty good, and then price trades above and closes above this down close candle. The next opening again trade lower and then railroads right on top of the open and then screams higher to close the end of the day strong after trading above Friday's high. On the hourly chart, I've added the new week opening gap here. This is Thursday and Friday's action. Consolidation most of the day on Thursday. We trade lower, swipe some lows and do a reversal. Price retests the midnight opening price and these down close candles. We rally into the close of the day and the close of the week. We open the week up. Price rejects the new week opening gap and trades lower, going into London, and begins the pre-market of New York in a consolidation while respecting the daily constant encroachment of the wick. We rally above and close with strength above that new week opening gap on the hourly chart. Very next candle we open, trade down and retest the new week opening gap and stay above the constant encroachment of that new week opening gap with the wick. Price trades higher. We get a down close candle here, which becomes a bullish order block after price closes. We open, failure to trade lower, we rally and create a bullish order block through this opening price. And then price consolidates for the next 4 hours there at the end of the day. On the 15-minute chart, I've added the news. It was just a FOMC member speaking today. Again, that same buy sign imbalance that we've been watching. I dragged it through time all the way into today's price action. Price referenced it at the end of London. And I also brought over this Friday buy sign imbalance. I was watching this level last night. After tapping into that Thursday range of the buy sign imbalance, we consolidate all the way into the pre-market, and then just before the New York Open, create a buy sign imbalance here. Price trades down into it and begins respecting the upper portion of this buy sign imbalance from Friday. So we have a reclaiming effect after this has printed as a bear flag. So we're painting a bear flag inside of a bullish level. Price breaks up against retail sentiment above this high, retest the imbalance and the Friday imbalance, staying above halfway, and skyrockets going into the new week opening gap. We rally through, retested on that down close candle, and then rally through Friday's high, and it stayed strong going into the end of the day after reaccumulating on top of this range here and inside this buy sign imbalance. Very strong day today, going all the way into 25,000 on the NASDAQ. On the 5-minute chart, we don't have much of a market maker model that I wanted to zoom in close and refine. So I want to speak a little bit about the consolidation like this and how we could anticipate price to have broken up and time that rally. So on midnight here, price tests the high of the new week opening gap and breaks lower. We create a up close candle here, which is going to be a bearish order block as soon as we cross over the opening price on this candle. And then every retest of the new week opening gap and that up close candle here is a selling opportunity. Price trades lower, creates a sell sign imbalance here. We retest it, create a new sell sign imbalance. We retest it and sell off, going right into 3 o'clock on London. We retest that Thursday buy sign imbalance and do a rally. This type of rally is very indicative of a V-shaped reversal. It just happens that after this kind of reversal happened to be put in the chart, it wasn't quite time yet. So we're in the middle of London launch when this happens. So after this rally here, price trickles back down, retests the daily constant encroachment level, this red line, and begins consolidating. After leaving this buy sign imbalance there, price trades up to the high of that Friday buy sign imbalance again. We begin consolidating and then trades lower, and it fails to create a sell sign imbalance through this low or this low. And then every single time we get a sell off here, every time we retest these lows, we're unable to create a sell sign imbalance lower. So this kind of price action is signaling to us that although they're trying to paint a bearish retail price pattern, that it's not likely to be fulfilled in a bearish sense unless there's a sell side imbalance that's created going through the low of that range. We don't see that here, or here, really. None of these sell-offs create a significant sell side imbalance after this range of sell side delivery is overlapped. So we stay in between the range high and low that's created and consolidate. And then finally Right before the New York opens, we rally and leave buy sign imbalances instead. And this is where we see the respect of that constant encroachment on the Friday buy sign imbalance on the 15-minute chart. And we retest this high, which is a breaker, small little breaker in there. Retest the high, and then price rallies. And it's breaking above, out of that bear flag. Retail gets squashed. Reaccumulation inside this buy sign imbalance, and then every premium array from the higher time frame is being respected here. Our new week opening gap and midnight opening price. It sends a delivery into Friday's high. Consolidation here through lunch. Retesting the down close candle here. Drag that in time. And then finally, in the heart of lunch, we get a rally. And price begins to consolidate going into the end of the day. On the 1 minute chart, I've zoomed into the AM session. I just wanted to get a closer look at that consolidation in the pre-market. And then I wanted to get a nice look at our first presentation fair value gap. So in the pre-market, we're having that tight consolidation. Notice how gappy price is, and it's very unclean in terms of delivery. There's gaps all over the place. There's not a lot of large movement in any direction. It's just price trades up to liquidity and then comes right back into the range. So there's no significant delivery outside of the range that we would be looking for in terms of a reason to believe that price is leaving the consolidation. So long as we keep coming back to equilibrium after trying to trade higher or lower, you're still stuck in that price range. And until there's an imbalance in either direction, we're not interested in even entertaining the idea that the price consolidation is over. So again, until we got that 5 minute buy side imbalance just after 8:30, there was no reason to expect even a bullish reversal yet. All of our confirmation signal timing comes after that buy side imbalance is created, canceling out the bear flag and canceling out the idea that we're going to continue in consolidation if the imbalance that was created on the 5 minute will hold. And we saw that, and we saw the respect of the constant encroachment of the large imbalance, especially here. You can see how it wicks below the CE, but the body stays above. Accumulation here going into 9:30 open. We rally up and leaving our first presentation fair value gap. Now there's multiple imbalances in this range. I've just refined it to these two candles here. I didn't want to include this third candle because within 3 candles of it being created, price had already delivered right on top of it and closed over. So to me, the real imbalance is from the low of this candle to the high of this candle. And this range is where price was inefficiently delivered with buy side delivery. So after we see the sell side delivery right on top of it, and actually coming down to the low exactly, very precise and algorithmic there. A reversal right on the very next candle through this sell side imbalance and closing above the high of our first presented fair value gap. We get a retest of that range on the very next candle, and that's the last time it was touched for the AM session. We deliver with pretty good pace going into Friday's high. It attempts to rally into it a couple times here, sinks it below retail, trying to buy the breakout, swipes their sell stops under this trailed low, and then continues into Friday's high, where all the retail was expecting to get in a breakout. Breakout traders are finally tripped in, and they get to capture the remaining portion of this move. Alrighty, so that's going to be it for me today. Hopefully you learned something. If you have any questions, leave a comment. I'll be happy to help. Anyway, I'll see you guys tomorrow.